So today what we're going to be doing is quite an important video addressing the events that have occurred in Syria over the past couple of days. So basically what this video is effectively going to be doing for you, the person watching this video, is it's obviously going to be teaching you a little bit more about the global events that have occurred most recently, but it's also most importantly going to be, as a trader, to anyone out there, and especially to my group of traders that I work with and all of my students, allow you to learn a little bit more about what you should be doing in your portfolios for the next couple of days and weeks going forward. I've received many messages from my own traders in my team, as well as students, asking me what they should be expecting going forwards and what exactly they should be doing in their portfolio. So this debriefing is not necessarily going to be showing you how you can make money, because morally I don't feel this is an event that you should be taking advantage of. But most importantly, it's going to be showing you how you should be staying risk off. And point number two is also going to be exactly how you should be reapproaching the market depending on what happens going forward into the future. So just to give you a bit of a background, I'm going to obviously give you some links to websites that you can go and have a look at that will tell you a little bit more about what happened in Syria. But effectively on April 7th, 2018, the Syrian government regime launched a chemical attack against the Syrian people. Now, I'm not going to go too deep into detail behind the fact that there is backing from Iran and Russia into, the entire regime, the fact that using chemical weapons is completely illegal, and the fact that many people were killed, many of them including innocent women and children, in this chemical attack. So effectively on April 7th, based on what we know of the event, 40 people were killed in this chemical attack and 500 people were injured. Now, this is following an attack that occurred on April 7th in 2017, which was also a chemical attack carried out by the Syrian government, where over 80 people died and over 1,000 people were injured. So it's not like this is the first time it's occurred. And over the past 2 to 3 years, there's been incredible instability in the Syrian region. But the reason why this event on April 7th was so vital to what we're going to be talking about today is specifically because of the global and economic risks that it might play, given the fact that France, Britain, and the US have launched tactical strikes against the military targets inside Syria relating to chemical weapons storage, production, and research. Effectively, what this means for us is that they have taken an active involvement in a civil war zone. There is a civil war in Syria where the people are fighting against the government, and the problem is that given that there is international involvement from countries like Iran and Russia, which are both nuclear nations, to say the least, the fact that three major United Nations leaders, Britain, France, and the US, are all now actively involving themselves, it is going to show us a lot of political risk going forward, a lot of macroeconomic risk as well. So to all of you who perhaps would firstly like to learn about what we're going to be talking about, this video is going to help you a huge amount. And secondly, also, it is going to give you a much better perspective on what you should be doing going forward in terms of, if you are currently exposed to the market, what you should be doing next, and depending on your exposure level, what you should be expecting, going forward, if you're going to land up losing money, or if you are able to get yourself out before anything does go wrong, or if anything might go wrong for that matter. But just to give you a quick heads up, to any of you who are interested in learning a lot more about what we do at the MS Equities Academy, please make sure to have a look at the YouTube channel. You can subscribe and also have a look at all of the videos we have available. There are tons and tons of educational content videos available for you to study from, for you to learn from, completely free of charge. So also feel welcome, if you want to go and have a look at those videos as well after finishing this video. But quickly going back to it, basically what we're going to do is go through a step-by-step process of exactly what I've identified as global economic risks, how I'm comparing it to previous events that have occurred in this fashion, and then also most importantly, how I'm going to approach this going forward. So what I've identified as the top 4 global economic risks are also going to be risks that you should consider as well. So the major one is going to be the possibility of a global market sell-off. So going into February of 2018, we saw a huge global market sell-off in the beginning of February, after a machine trading system actually took advantage of the market and triggered a mass sell-off. So it wasn't necessarily due to massive political global economic risk. And following, we've had a lot of volatility going into the whole of March and also April as well. So Most importantly, what we have to consider here is that they could trigger a possible global sell-off in major markets, depending on what happens. Obviously, you're going to see global volatility is going to rise. You might see a very big risk off in the markets as well. So that's also a point to consider. The second point to consider is also the further global trade tensions and economic risk. Between the fact that Russia is involved in the meddling inside Syria and the fact that many countries, including Britain, are also taking huge economic action against Russia and its counterparts, with the poisoning of a former spy inside Britain with a chemical nerve agent happening earlier on in the year inside Britain, it's made Britain very unhappy about the fact that now, under, a few months later, Russia has already been caught in an involvement in a second chemical attack for 2018 alone. The US already has their own issues that they are dealing with, with regards to Russia and also with China. Given the fact that China is not involved in this, does not matter. But obviously, given that there will be global tensions, it could cause any negotiations with China to also take either a backseat or in some shape or form become more stressed based on the fact that they will try and take a more defensive tactic towards it. And, it might be a situation where the US decides to use the stick rather than using the carrot based on any negotiations going forward with other nations. The other major one is the knock-on to tertiary effects in global investor confidence. Obviously, most importantly, in order to actually have the market stay afloat and liquid, you need investor confidence. As you'll see, as investor confidence begins to drop, you'll see liquidity begin to thin and volatility will pick up. What this can occur is that many people perhaps, now this is obviously my personal opinion, many people would perhaps see this as a possible global economic risk-off event, meaning that they'll try and focus on taking profits, they'll focus on not trying to enter any positions until such time as they know exactly what is happening going forward. The biggest problem as well is given the fact that this is an event occurring in Syria outside of any major nations, and also given the fact that there is a lot of Iranian and Russian involvement, the information flow is also very, very tight. There's very few, reliable sources of information available, which is also going to make it very difficult for people to have a clear picture painted about what could happen going forwards, and that is obviously going to knock on to investor confidence as well. Lastly, one of the major big, issues involved, which I would not necessarily consider happening immediately, is the fact that there could be a spill-off into additional conflict inside Syria or surrounding nations. So, the biggest issue that many people don't consider is the fact that Syria is a nation that has a military that is capable of fighting back, and the fact that they have backing from two nuclear nations, Russia and Iran, gives, the fact that they could be heavily funded with resources and weaponry and soldiers should they choose to cause some sort of global conflict. Now, this is a big issue given the fact that they are going to be going up against the three strongest nations on the planet, with it being France, Britain, and the United States, to say the least. This could cause massive global conflict. Now, given the probability ratios, I think this is a very, very low and slim probability event, but considering we have to keep it on the list of possible global tensions and risk. So now, one of the biggest things that we have to do as traders and also risk assessors is to understand what could have happened based on previous events in comparison to what is happening right now. So given the fact that I, wasn't able to take a lot of time to consider this event, given the fact that I knew something could spill over, this has been progressing over the past couple of days. We're only sitting about 5 or 6 days later that I'm doing this video after the attack on the 7th of April. What I was able to do is consider two major events that have happened previously. And what I'm going to do as well is show them in comparison to this current event based on historical data, but then also show them in contrast to either event as well as the event in Syria. So the two major events we're going to have a look at is the 9/11 attacks, on September 11th, 2001, and also on the 20th of March, 2003, when President Bush basically triggered the mass attack on Iraq, the global offensive against Iraq after, there was massive global conflict there. They were trying to, liberate the people from Saddam Hussein's, grip, as well as they had suspicion that there were weapons of mass destruction inside Iraq as well that could cause, a massive, massive risk to the global community. So the biggest reason why we're using these two events is because they're completely different events to themselves, but in a way they have comparisons towards what's occurring in Syria. So the 9/11 attacks was completely, obviously unsuspected. No one saw it coming, and most importantly, it was an attack on US sovereign soil. So that caused a major, major hit. It was also the World Trade Center that was hit, which was the global economic center of the world, some may argue. The other problem is that looking at the attack on Iraq, the global offensive that occurred, this was something that occurred not only right next to Syria, but also it occurred outside of US borders. Most importantly, it occurred in Saudi Arabia. So the reason why we're going to use these events is to assess what happened in the markets during those times, and specifically what could have happened in the markets going forward. So the big important thing to consider is currently the US, France, and Britain triggered all of this global offensive against Syria over the weekend. So they only triggered this offensive on Saturday, which is today the 14th. Whereas now what we're going to be experiencing is the markets opening only on Monday. So we're only going to see the reaction of the market in a few days' time. Another one also to say, in contrast, is the attacks on 9/11 occurred at 8:45 in the morning on a Tuesday. When this attack occurred, the markets were immediately closed and only opened up on the 17th. So there was a couple days that the market was completely closed. And once again, this occurred on a weekday, but the markets still got closed. So we're also going to see, the knock-on effects of that. The attacks that occurred, the global offensive on Iraq occurred on a Thursday evening. So it's not necessarily the fact that we're going to see anything where the markets jumped during that period of time. It was announced on the 19th of March 2003 that they were going to take offense, and then the global offensive was initially launched on the 20th. So basically what we're going to do is have a look at three major indicators that we can consider in the Syrian conflict as well. So the major one is the Dow Jones Industrial Average that we have a look at. The second one is US crude oil, and the third one is going to be the gold prices and what effectively happened to that. So in September 2011, just to give you a breakdown, effectively what happened is the Dow Jones Industrial Average took a 946-point drop on that day between the 10th of September, the day before when the market closed, and the 17th when the market opened again. So you're going to see that 946-point drop is very large. Based on the attack in March, the Iraqi invasion, there was actually only a 9-point drop. So there was very, very little effect on the Dow Jones Industrial Average. Crude oil at the time on September 11th took a $5 drop over the following 15 days. So these numbers that I'm reading you are following the 15 days after the attacks occurred. So you can see that the $5 drop is not really that much. And you can see that the Iraq invasion, there was a $7 drop following the 15 days. So we're also going to read into the crude oil. So in terms of gold prices, there was close to an $18 rise on gold after the September 11th attacks. Basically what you're seeing there is investors are moving money into the safe haven assets, gold being one and bonds being another one. In the Iraqi invasion on March 20th, there was actually an $8 drop to gold. So what you're seeing there is not only did the Dow Jones Industrial Average not react the same way as on the September 11th attacks, but the same thing occurred with gold. So what you're effectively seeing now is not only are these events in comparison to global economic risks, but they are actually contrasted completely against each other. And the biggest reason behind this is specifically because the global offensive launched in Iraq had no effect on the American people whatsoever. Now, when you see absolutely no effect on the American people, but it's still global economic effect, you could see a possible quick sell-off to the market. You could see a possible risk-off for a single week, but you're going to see nothing major occur in the market. And that's something you have to consider. Nothing major occurring unless it's on US soil. And this is, basically statistical proof showing that there was no major events occurring based on that. One thing you can see that is obviously correlating are the crude prices. So you're seeing that crude prices are falling on both periods. So just to give you insight into, specifically what happened in the crude prices, given the fact that we can read into that, given that it is a correlation, basically, just to read from this, there was a $5 drop over the 15 days following the attacks in 9/11, but this was a total drop over 9 weeks of close to $9. So there was close to a $9 drop, all the way from $28 down to $19 per barrel after the September 11th attacks. So naturally, we saw a very strong sell-off. Now, the sell-off was followed by a strong recovery. So it's not like oil prices stayed low, but following the attack, oil prices dropped very steeply. The second point is on the 20th of March, the global offensive against Iraq. There was a drop of nearly $7 over those 15 days, from $35 down to $28. But following those 15 days, there was a total drop over 6 weeks of nearly $10. So what we've seen based on both events is that the US crude oil prices have fallen on both major events, followed by strong recoveries. So that is the closest correlation that we can see in the data that we've assessed. Now, what I could have done is gone into a lot more data. I could have assessed the VIX, I could have assessed global bonds, I could have assessed currencies. The main reason why I didn't necessarily assess that is because this is a very straightforward, learning lesson for all of you to learn about the global economic risks that we're assessing, and also specifically to have a look at what certain key asset classes in the global markets actually did during that period of time. So specifically, what I can do is give you a summary and some feedback to end off this video. Number one is I usually land up giving a sliding scale based on my opinion of these events. So if I scale these three events, so the event of 9/11 attacks, the offensive on Iraq on the 20th of March, and now the offensive against Syria, where only, just to say the least, a few key assets and locations inside Syria was attacked. It's not like they're rolling out troops, they only took a missile global offensive, meaning that they only fired missiles into Syria. But like I said, the global tensions could mean that there is a possible conflict to spill over. So it's more so something that I'm preparing for. But if I would land up scaling the 9/11 attacks as a scale 10 out of 10 event, which, is to say the least possibly even a worse of an event given what happened that day, I'd scale the Iraq attacks as at least a 6 out of 10 event. It was a major event. People knew that it was going to spark into a large global conflict. They knew they were going to be putting troops on the ground at some point in time. And that was also a major thing to consider. Now, the Syria event, given the fact that we have little information, there's only been a missile offensive launched, and that this global conflict has lasted a long period of time, and that Syria is being backed by 2 nuclear nations, I'd only rate this as a 3 out of 10 scale event. So specifically, that is also what is giving my opinion of what could possibly happen next. So 2 things that I considered based on why I also rated this as a scale 3 out of 10 event is specifically because this will be the 3rd major combat for United States in the Saudi Arabian region. So what you need to also consider is the fact that they have had a global offensive in Iraq, which is next door to Syria, as well as a global offensive in Afghanistan. So there has been a long history of global conflict since 2003 for the United States in the Saudi Arabian region. This is not new to them. And point number 2 is also given the fact that the Syrian conflict has lasted a long period of time. To say the least, we could at least scale this as 3 to 5 years worth of conflict between the people of Syria and the governments of Syria. So it's not like this is a shock to the global markets, and more so, we've probably seen a lot of global assets price in going into this conflict. Now, the 3 major aspects that I am considering going into the next week and couple weeks going forward is there could be a possible sell-off to crude oil prices. Now, I currently have short positions in crude oil. Most of these positions open up before the conflicts actually were announced. And, effectively what I'm seeing is that there could possibly be a sell-off there, but I couldn't necessarily consider or confirm the fact that it could happen. Another one is that there could be a possible rebalance to the Dow Jones Industrial Average. So you could see a possible sell-off, a possible risk-off over the next week or couple weeks going forward. But I don't expect it to be a consistent sell-off as long as tensions don't escalate. Should tensions escalate, it could be a completely different story. But, necessarily, we could see a possible recovery to the Dow Jones Industrial Average. Another one is that I'm also not expecting a huge move in gold or bonds or any safe haven asset classes that other people might consider moving to if investor confidence drops. Necessarily speaking, we're in a space where equities are, in a sense, doing all right for themselves. You know, we've had a strong push down for the 2018 year, but we're necessarily expecting a possible recovery. I'm expecting a rise in the VIX, so in volatility, but I'm not necessarily expecting that investors are going to see this as a massive global conflict and people should be moving to safe haven asset classes. Now, considering that, the three major things that I'd also have to consider going forward that I'm going to be watching very closely is the escalation of conflict in Syria, if this could get worse. Secondly, I'm also going to have a look at how the global community speaks towards Iran and Russia and what they might be planning going forwards. The global trade tensions between China and the US is also causing a lot of volatility in the market, and I feel that could also spill off to whatever approach the global market takes towards Russia specifically. But considering all of this, it is a massive global conflict that's involving people. We have tons of people that have lost their lives, innocent people, including women and children, and I wouldn't necessarily consider this event as a possible profit-making event. I'm not going to be trying to make money off of this event, and I'd also, you know, speak to everyone saying that this should not be an event where people try to make money. It should be an event where people look for security and where people find ways to not take advantage of this, you know, atrocity that has been committed by an actual government entity. And actually, you know, for all of us, we look to this as a lesson to be learned in terms of global conflict, global economic risk, and how we can also consider managing our portfolios when we are in times like this. So once again, everyone, I just wanted to say thank you so much for tuning into this video. Like I said, this is just an educational video showing you a great insight into how I assess global economic risk and how I assess events that I have not been able to see coming and things that have not been planned. This will also allow you to learn a bit more about what you should be doing going forward when we walk into other global conflicts around the world in the future, as well as how you're able to assess the risk on your own trading and investment portfolios and what you should necessarily be considering as factors and opinions that you're going to derive from the events. Like I said, to any of you who are interested in having a look at the YouTube channel, please make sure to subscribe as well so you can keep updated with weekly educational content. And to any of you who want to find out more about what we do at the MS Equities Academy, you know, we train students in 25 countries around the world. We are, you know, a global training institution where we teach people about trading, investing, and wealth management, very much like this, and how they can create a, you know, financial future and professional future for themselves, also for financial professionals in the global industry. So to all of you, once again, thank you for tuning into this video, and I'll see you in the next one. Cheers for now.